Now, anyhow, let's discuss about ICDS for revenue recognition. What is revenue? All of us generally feel that revenue means sales. Yes. But the point is, here revenue means income. From income tax purpose, when we think about, we have to recognize the revenue. When an income is earned, we should show it. But the point is, when is the income earned? What is that time when the income is earned? That question actually troubles the income tax department. Because as a taxpayer, I will always try to avoid, no, income is not earned. Income is earned a little late. So this way people will try to escape. And income tax department will say, no, you earned it, right? So to come put an end to the dispute, proper principles have to be laid down. And that principles are laid down in ICDS 4 on revenue recognition. That principles are laid down in ICDS 4 on revenue recognition. So what this ICDS says, let's discuss. First thing, it says that it is to determine, this standard is to determine the revenue from ordinary activities of the persons. So when persons do some ordinary activities, when that revenue is recognized, that is discussed under ICDS. Okay. Suppose example, when you sell the goods, suppose when you render the services, so you will get some money, right? So when that revenue should be recognized. Suppose example, you have some resource and you have given the resource to others for usage. So when the revenue is recognized, now that resource may yield you interest, dividend or royalty, okay, but when to recognize the revenue? The question is answered in this ICDS. But before we tell that when the revenue is recognized, I will tell you that what is revenue. Basically, revenue means the amount of gross inflows of cash. What is revenue? The amount of gross inflows of cash. So whatever cash coming in, that is revenue. Clear? Correct. Second thing, don't worry, I'll tell all other things. Suppose you have taken loan and cash is coming in. It is not revenue, obviously, because you did not earn it. So amount of gross inflows of cash or receivables. Sometimes when you sell the goods on credit, the debtors are nothing but receivables. You have to receive the money. So income has accrued. Revenue has not been received, but it is earned, correct? So gross inflow of cash, receivables or other considerations. Sometimes we also receive other considerations. Suppose I am a lawyer and I fight a case for Mukesh Ambani or for any others, then I win the case for him. He will give me some gifts. So this is revenue for me. If I get cash, a car, that is a revenue for me because I earned it as a perquisite. So it is not always that you get revenue in the form of cash. Sometimes your revenue may be due, so receivable. Sometimes it may be received in the form of assets, gifts. So it is other considerations. So revenue may be gross inflow of cash, receivables or other considerations. But wait. Suppose example, I have to travel by air from Hyderabad to Pune for taking a workshop on taxation. That's it, I can. So in that case what happens? That I go to air ticketing agent and he takes the ticket and he earns some commission. Now for him, I would have paid tax ticket money to him, but that ticket money is not revenue. For him, the commission what he receives is the revenue. Suppose I take LIC policy from LIC agent. If I pay the premium amount, it is not revenue for LIC agent. The commission what he receives is the revenue. So understand, generally it is the gross inflow of cash, receivables or other consideration. This is revenue. But when it comes to commission agents, whatever gross inflow, no, it is not revenue. What is revenue? Revenue is the commission received by the agent. Fix it in mind. Okay, shall we go forward? Now suppose I have sold the goods to somebody. Like I have a Kirana general store, I sold the goods. When is the revenue? I sold chips packet. I received 20 rupees for the packet. Okay, when I received 20 rupees, it is revenue. Suppose example, I sold the shares. So when I receive the money, it is revenue. Now, I'll keep it more technical for you to understand now. First thing, ownership should be transferred. Ownership should be transferred. Significant risk and rewards with the goods should be transferred. Ownership should be transferred, significant risk rewards should be transferred. One more thing, no effective control should be maintained. Suppose I sold the goods, that means I don't have any rights on the goods now. So ownership is transferred, significant risk rewards are transferred, no effective control is maintained, right? I don't have the right to take it back, correct? So we can say no effective control is maintained. And I know when I sold the goods, I will get the money. So reasonable certainty is there that I am going to collect it. If these three conditions are satisfied, what is the first condition? That ownership is transferred. Significant risk and rewards are transferred. Second condition, that no effective control on the goods is exercised by seller. Third, reasonable certainty is there with the seller that he is going to get the money. If these three conditions are satisfied, ownership in these three conditions are satisfied, on the sale of goods, revenue should be recognized, income should be recorded for income tax purpose. Okay, so I spoke about sale, but suppose I will talk about construction contract. The contractor builds the buildings, and when he should recognize the revenue? Please shut up. It is not covered under this ICDS I am talking about. This ICDS should shut up. ICDS 4, keep quiet, because it is covered by ICDS 3 on construction contracts. I did not tell shut up to you. I said that ICDS 4 keeps quiet because it is covered by some other ICDS. What about service? Suppose we have rendered the service. Then how much service you have rendered? Suppose example, I go to a saloon and do some facial or haircut or whatever. I pay the money immediately and I come out. So the revenue is recognized then and there itself. There is no doubt about it. Suppose I took 30 days yoga classes from a yoga teacher. I want to maintain my health because I have to give value to my students, and if I am healthy I can. It is less than 90 days, correct? So in that case, once that time is complete and when the services are complete, then the revenue should be recognized. Suppose example, I started taking yoga classes on March 15th and April 15th the classes will end. Suppose March 15, 2022 I started and April 15, 2022 only it will end. When should I consider the revenue? In 22 year or 2021, 22 previous year or 22, 23 previous year? The answer is 22, 23 previous year. Once it is complete, then revenue should be recognized. So if your service period is less than 90 days, wait for the completion. On the completion, recognize the revenue. Clear? Yes, sir. Suppose if it is more than 90 days, then what? Then decide, is it for a certain period, fixed period? If it is for a fixed period, then over the period you decide, you distribute the revenue. Suppose example, I took internet connection from Act FiberNet for 1 year, from January to December. Then in that case, I have whatever I paid to Act FiberNet, that will be distributed over the period equally by Act FiberNet, correct? And revenue will be recognized accordingly. Clear? On a straight line basis. Suppose example, if it involves certain stages of completion, then no problem. I will determine the revenue on stage of completion basis or percentage of completion basis. It involves lot of activities. Suppose example, Prabhas is going to start shoot one movie. I actually don't know what movie he is going to shoot further, but anyhow Prabhas is going to shoot one movie. Shooting is going to happen in Switzerland, Hong Kong, Russia, China, America, India, Maldives, so many countries. So they decided that movie is for 3 hours and 15 minutes shooting here, 30 minutes shooting there, like that. So once one stage is complete, that part of revenue will be recognized. Okay? Sir, if Prabhas takes for shooting a fixed amount, then we will follow this. But suppose if Prabhas says, no, I don't want fixed amount, I want profit, then no problem. As and when the revenue is generated from the sale of tickets, as the percentage will be considered as revenue for Prabhas. Nothing, no problem with it. Correct? On a proportionate basis, as and when the income is generated, proportionately Prabhas income is also generated. If he is a profit partner, then he is, of course, right? Hey, South India, Telugu, Tamil stars are awesome, yeah. Really, they are doing good job in movie industry compared to Bollywood. They are doing wonderful job. Now come to interest. Interest related income. Suppose example, I took a bank loan of 1 crore. I am paying 6% interest. So how much is the interest per annum? 6 lakhs. So 6 lakhs is the income per annum, interest income per annum for the bank. So 6 lakhs means how much per month? Sir, 50,000 per month. So 50,000 is the income per month for the bank. So interest of 50,000 will be considered as income for the bank. Okay, this is on time basis, no doubt about it. Suppose I paid extra income tax or extra customs duty, GST, and the department has to give me back the money. But government sometimes delays. So because they delayed, they also paid me interest on the income tax refund. That interest on income tax refund is treated as income when? Not on the basis of time, please. When it is received, it is treated as income. When it is received, it is treated as income. Okay. But suppose sometimes what happens, zero coupon bonds, deep discount bonds are issued by the companies. Now, they took 80 rupees from me and after 2 years they gave me 100 rupees. Now there is no fixed percentage interest like 6% or something. But at least there is difference between these two, right? I paid 80, I got 100 after 2 years. What is the difference? 20 rupees. This 20 rupees is treated as income. But sir, it is for 2 years. Yes. So for each year, 10 rupees is the income. Right? For 2 years, 20 means for each year 10 rupees. Can't we determine the income? Yes, this is how the incomes are determined. Clear to all of you? Any doubt? Very good. Now what about royalty? Suppose I have written a book for taxman publications. Then as per the agreement, the income will be determined. Suppose example, in Hyderabad, there are some small publications, petty publications like Sia publications, Rahul publications. If I write books for them, then they will say, Ganeshji, we will not pay you any money on the basis of sales. But one thing we will do, we will pay you fixed amount. Chalo 50,000 le lo sir, 50,000. So as per the agreement, whenever I receive that 50,000, that is my income. But when I think about Taxman publications, Yaschan publications, McGraw-Hill publications, they give a percentage on the sales. So as per the agreement, I am going to get percentage. So based on the sale, they will continuously determine the income. Suppose from 1st April 2021 to 31st March 2022, they sold 50,000 copies. On that, whatever sale price into commission, they will pay me. 22-23, this is the sale. On the basis of sale price, I will get commission. Like that, on the basis of sales, I will get. So royalty, always remember that it is based on agreement. Now what about dividend, sir? Dividend is as per the Income Tax Act. So ICDS is silent. ICDS is not telling anything. ICDS says that let it be based on Income Tax Act. Now you may ask, sir, what that Income Tax Act says? I'll tell you, wait 1 minute. What is dividend, do you know? Dividend is a part of the profit distributed to the shareholders. So basically when company do business, it earns profit, it distributes part of it to the shareholders, and that is income, dividend income to the shareholders. Now if the dividend is declared at the AGM, right, once the year is over, the dividends are declared. So on declaration, it becomes the income of the shareholder, right? But suppose during the previous year itself, some interim dividend is paid because of surplus profits, they declared interim dividend. Then what to do? Then as and when the interim dividend is received, that is treated as income. Now this is not written in the income ICDS. This is written in Income Tax Act. Clear? So no doubt should be there in your mind when the dividend is treated as income. Interim dividend, final dividend. Final dividend is declared in AGM. On declaration, it becomes income. Interim dividend sometimes is declared during the previous year, and when it is received, then it is treated as income. So date of receipt you consider. Okay, clear? Lottery income, when it is received, it is treated as income. Horse races income, when it is received, it is treated as income. Tuition fees, when it is received, it is treated as income. Right? This way you should be able to understand. Suppose it is formal income, salary, when it is treated as income. The answer is salary is a head of income which is not covered by ICDS. So ICDS is silent. So when salary is treated as income on receipt or accrual, whichever is earlier, where they said this, under the salary chapter. Okay, clear. When I talk about private tuition fees, when I talk about winnings from lottery, because it is under other sources, and for other sources ICDS is applicable. Clear? That's it. Now let us come to the conclusion. Disclosures under this ICDS. Disclosures are petty, very small, basic things. I'll simply tell you some things. That when you sell the goods, what is the gross sale revenue? And if you feel that there is going to be some bad debts, then don't recognize it as revenue or show it as bad debts under section 36. No problem. If you feel sure that this is going to be bad debts, show under section 36 that this is going to be bad debts. When you are going to sell, show it as revenue under section 28. This is what we have to disclose. Same with services also. When you are going to get gross inflows, that is your revenue. Show it under section 28 as income or under 56 as income under other sources. Correct? If it is distributed over the period of time, then which method you applied to determine the income, percentage of completion method, what is the method you followed, disclose that method also. Suppose you received any advance, then show that it is advance. Suppose if it is a deposit, not income, then disclose that it is deposit, not income. So like that, proper disclosure should be given under ICDS on revenue recognition. I hope you enjoyed this ICDS, you understood what I tried to convey. Correct? Let's meet in the next ICDS.